Now, though, many of this morning's front page is dominated by yesterday's dramatic falls on the world stock markets. The Telegraph describes it as Black Monday. The Daily Mail calls it the Great Fall of China. The Express featuring, though, mainly on pensions and investments and what impact that's going to have for us. Well, the losses were triggered by concerns about slowing growth in China, the world's second biggest economy. The BBC's economics editor is Robert Peston.
China has been generating a quarter of the world's growth for years and years and years. And if growth falls from 10% to 3%, well, I'm afraid that does mean that global growth slows down very dramatically indeed.
Well, let's speak then to Phil Scott from Simple Investments in Godalming. Morning, Phil.
Good morning, Mark. How are you?
Yeah, long time no speak. Good to have you back on the show this morning. Just try and put this all into layman's terms, really, because we hear these dramatic headlines, great fall of China and so on. What does it actually mean to us?
Okay, well, China is the world's second largest economy now. So clearly everything that goes on over there has big implications to investors, people owning blue chip companies, for example. US, of course, is the biggest economy in the world. And as Robert Peston just said there's been talk of a Chinese slowdown for quite some time now. Their growth has become integral to global growth, of course. And although they're telling us that they're growing still at 7%, well, I think some people are genuinely starting to question now whether that is the case. Now, everything's all a little bit opaque in China, as I think we know. It's difficult to know exactly what's going on in the country, and stock pickers have had a nightmare trying to pick Chinese companies because ultimately sometimes their financial statements have not been accurate, let's put it that way. So it's all a bit opaque, and investors, in simple terms, have just of recent lost confidence, I think, in what China is saying. And of course we have so many companies that sell to China, and this is a bit of a problem because of recent what China has had to do, and in terms of what's happened there, is that they've devalued their currency out of the blue. And of course that makes it more expensive. If you and I were selling washing machines here in the UK to the Chinese, for example, and there are lots of companies that do export to China as an important market, well, our goods have all of a sudden become much more expensive to Chinese buyers as a result of this devaluation they've done. But the long and the short of it is there is concern that their growth is genuinely slowing. Lots of companies have exposures to China, understandably, and we've seen this big fall on the market. And that's what's happened over the past 2 weeks, really. But ultimately, yesterday was the massive downdraft, and that's why it's hit the papers this morning.
And briefly, Phil, I mean, from my days of financial advising, which was a long, long time ago, the message was always, at this stage, the worst thing you can do if you've got an investment, for example, is panic and withdraw your money.
I think that's absolutely right. Time has shown, time and time again, that when there is fear in the market, it's all about fear and greed, as you probably remember. When there is fear, you probably want to sit tight, and you probably want to look to buy something for the future. The FTSE has fallen 17% since the beginning of May, when the Tories won the election. The US has now fallen 13% in short order. We've been buying shares in here selectively for clients. We've seen big names, banks like HSBC, for example, one of the biggest banks in the world. Its shares have fallen over £1. What is that? Probably 10, 15% over the recent past. So we're holding tight. We say we put the tin hats on and we hang on. The FTSE, for what it's worth, has bounced 100 points this morning. That is maybe small beer when it's fallen over 1,000 on the month. But it looks like we're trying to stabilize, but you're right. Sit still. And of course, lots of people who have money in pensions, well, they tend to be longer-term investors anyway, so they will be doing that. But
I'm sure you look mighty fine in your tin hat there, Phil.
Well, grey hair, tin hat. I don't probably not looking at my best, but we've seen this before. The fact is, Mark, the equity markets have been rallying now for 6 years.
Sure.
This is not a complete surprise, even if it's a little bit stressful temporarily.
Phil, great to have you on. Good to get your expertise. Phil Scott from Simple Investments in Godalming, 8:26.